on it.
No, it's just falling out. So this one right here, that long piece, whatever it is getting ready to fall out. I just didn't touch it yet. The one that's
I
longest,
see it red.
it's getting ready to fall out.
Oh, okay, clear it up.
On froze again, slow. Froze again, slow. Now it's moving. Froze again, slow. Now it's moving. Oh, it's lag.
Okay, close it out so it won't interfere with this one. It is 5:02. I'm gonna wait until about 5:04. Got your words ready?
Yep.
Instead of it being all the way at the bottom, you should put them right up under where you're reading today. But that's up to you. This you signed out. I don't want to see you signed in.
I did sign. I'm not signed in. You would have hit my volume. There's someone else.
Okay, so just close it out. Thank you. We did not go exercising today.
Oh, yeah.
Got to get our schedule together. This ain't working.
We should write it.
We got to write it out. We just got to go regardless of how we feel. Regardless of how we feel. That's for both of us.
It'd be hot. It'd be way too hot outside.
Well, all the more reason we gonna. If it's hot, then we gonna sweat. That's the purpose of exercising.
It's like still days.
Well, we're gonna have to go buy a gallon of water and put it in the cooler in the car. Can't keep making excuses. And we hadn't exercised in what? 3 weeks?
Well, no, I did a couple of walking at school because she made us go to the track and walk. And don't forget, I got to walk at school down long
That is
hallways.
not, girl, please.
Walking, exercising, still the same thing. Don't forget up those stairs too. What I gotta be doing. And let's see what else. It's just
It's not the same.
once she make us run too, you know what that's gonna be. So I'm gonna
Whatever. We need to get back on track. Keep allowing outside people interfere with what we got going on. We make excuses for ourselves as well. Okay. It's 5:04. Let's get started. Alrighty. Hello, everyone. Welcome back. Or hello if you're a first-time viewer. Today we are going to be talking about putting your financial plan in place. This is a reiteration of what I've talked about the past 2 videos because I am finding it is very important that you all listen to what we're trying to share with you. And I'm talking, and this is more so in reference to people in my life these past couple of weeks. I definitely need you all to be in tune with these videos and learning the lessons to start following the plan. You can't keep living your life struggling when I'm sharing the tools and resources you need to change your current situation. Because I'm not going to let you affect my plan of action and things I have going on. I can't do it. It has nothing to do with me not loving you. I'm just choosing my wellness over chaos and interruption. So, family, friends, I need for you all to start paying attention and following the plan because I'm moving on with or without you. There's no easy way to say it. So, yeah, let's get started. Let's go back over some things we've already covered before. And then we'll move on to new topics to cover next Sunday. Well, next Sunday we're going to get back into the career development videos. We started with Kayla's interview tips and stuff like that. So we're going to continue with the career development starting next Sunday. So again, today's episode, putting your financial plan in place. To those of you that do not know us here at King's Legacy, I am NECA.
And I'm Kayla.
And we are King's Legacy Group. Before we get started, our short disclaimer. The information King's Legacy Group shares is based on our own opinions, experiences, practices, and insight into the strategies suitable to our family's financial wellness. We are not financial advisors, insurance agents, investment brokers, lawyers, etc. Our videos are for informational, educational, and entertainment purposes only. You must do your own due diligence and seek professional assistance when you find the need to confirm or expand your understanding of the knowledge on any topics covered in this channel. Always remember to make smart decisions that suit your own needs and do your own research. If you like to read the full disclaimer, it is available on our website at www.kingslegacygroup.com. What is King's Legacy Group if you're new to the channel? King's Legacy Group is a financial literacy platform that is bridging the gap between the youth and the mature adult to achieve generational wealth, providing the tools and resources to understanding financial literacy and how to change your mindset to make good money decisions from good money habits that will empower us for life. We teach the practices needed to achieve financial wellness and adapting the belief of when you learn, you grow, and then you can earn the wealth you deserve.
Our YouTube live episodes on Sundays at 5 p.m. geared towards our youth ages 12 to 17 years old, and our Wednesday live videos at 7 p.m. are geared towards our adults, both learning the tools and skills needed to encourage generational wealth habits.
Okay. And as a reminder on every episode, please take the time to click like. So before we go any further, click like. Please take your finger and click like. And if you want to click share, that will be helpful. That's help spreading the word and making us more known to more of our community. This helps us grow in so many ways. So please click like, click share, make a comment if you like, and you only have to subscribe one time on any video. So one time is it. You don't have to do it again on any other video. All right? Before we get started on today's content, I'm going to let Kayla go ahead and do this week's vocabulary words. And go ahead.
All right, first one, money, a resource used to buy goods and services. 2, loan, a thing that is borrowed. 3, credit score, a number based on how well you pay back your debts. 4, checking account, an account that is used for purchases. 5, credit, to buy something without having to pay it right back.
Okay. So my children that are watching, keep it there. The vocabulary words, even though we give you the definitions, whether it be brief or long, you still should make sure that you take time to study the words. Parents, go over the words with your kids and expand on the information on how to understand the vocabulary words that we share. Before, I was given some insight into life circumstances or life relevancy to the words so that the kids could understand. But at this point, I decided it's up to you parents to have this conversation with your kids. Um, we are our children's first teacher. So I'm going to leave that up to you to expand the understanding of the vocabulary words that we go over every Sunday. Okay, let's get started with today's content. Today we share the concept of creating a system, creating a system to finance your lifestyle. To master the information, tools, resources, and tips that King's Legacy Group shares with you by putting action to plan and sticking to that plan. There's no way around this. It's not. There's no easy or fast solution I can give you. So we need to stop being impatient and just see the rewards for putting in the work. The work you put in to master financial literacy, to take control of your financial wellness. The rewards are outstanding. So do the work, go through the process, learn what needs to be learned, put action to plan. Once you learn it, you got to plan out what's best suited for your life situation, for your financial situation, for your life goals. And once you put that plan in writing, because that's the best way to help you stay focused, stay on track on what needs to happen first, second, third, fourth, fifth to the 100th. It helps keep you motivated and you can visualize every time you look at it and read it and know exactly what you need to do, feel proud about what you have already done and accomplished. So, yeah, put action to plan and you can start doing that by putting it in writing. Okay. If you have viewed, like I said, the last two episodes, I have reiterated and introduced the process and plan of action you should consider because, again, we are not financial advisors, but we are sharing our journey and what it is and what's working for us and has worked for generations with other people like the wealthy, the rich, the famous, and most of all, the financially secure individuals. Each thing I just mentioned are different levels, but the most financial leader would be the financial secure individuals because they understand exactly what needs to take place to become wealthy, to become rich, to become financially independent. That's the most important on all the ones on the list. I want to be financially secure. If I'm financially secure, that means I have everything else under my belt, right? Okay. We're going to talk about how to create your banking system, which starts with the obvious: commitment in budgeting, discipline in savings, and allocation to control where your money goes. Bottom line, no miracles. There's no miracle solution. You can't change you can't change or improve your money struggles until you change your relationship with money to manage your money habits. Whether you have no money habits because you're young and you're starting out, this is the best time for you to learn the good money habits so that you can avoid going into bad money habits, going into debt. making bad decisions when it comes to your money and your financial growth. If you have made mistakes in the past with money, no excuse. It's time for you to change those bad habits into good, productive habits. A good time for the young to get started, and a good time for us old heads to correct our bad behaviors. So yeah, we're gonna do this together. Um, the process and plan of action enables you to make your liabilities assets. That's the whole thing, making your liabilities assets. And the way of doing that is controlling and managing your money accordingly. We all have gone over the 50-30-20 rule. Remember, we talked about the 50-30-20 rule. The 50% is for your needs, 30% is for your wants, and 20% is for your savings. Remember, we went over that? Okay. This rule is crucial to your financial success. And if you need to adjust the numbers to fit your practical needs to get started, then so be it. Adjust it however you need until you can get to the point of the standard 50-30-20 rule. Okay? And again, to understand what the rule is, the 50% applies to your needs, which is fixed expenses. Fixed means your household expenses, meaning you have to have those to survive. Shelter, food, utilities, those are fixed expenses that you are going to pay every month. Okay? The 30% rule are your wants, which is also called your flexible expenses. For example, let's say the gym. Yeah, you want to be in good health and pay for the gym membership, but honestly, you don't need the gym membership to be practicing good health habits. You can exercise outside or in your house for free. So that's what is meant by flexible. Something you want, but not something you need. The cost of it is not what you need, but the health side of it is what you need, but you can do it by not having a bill to pay to achieve it. Okay? The 20% is your savings, also considered your security plan. Okay? We all know what savings is, putting money aside to be prepared for the unexpected, the unknown, the unforeseeable, whatever word you want to use to help you understand, that's what savings is for. So the 50-30-20 rule is crucial to you building your financial wellness. So I want to elaborate on the content from the last couple of videos. And I'm just going to break it down. Although I've already mentioned most of this, I'm going to break it down even further because we have to make these changes in our lives. I had to make these changes in my life during this pandemic. Um, I was a single parent, teenage parent. I went through all the struggles you can possibly think of in life. I took care of my household, raised my kids, thought I had a good handle on finances, bought a house, bought cars. Bought brand new, walk into a dealership, bought brand new vehicles, SUVs. I'm not paying them down. I don't need to. My credit speaks for itself. But things happen in life where my bottom fell out and I had to start over. And during that process of starting over, I was in a hole that I didn't think that I could get out of because of the stress and depression and having all the responsibilities of being a parent, doing it on my own because unfortunately their daddies didn't step in and step up the way they should have. but that wasn't for me to dwell on. I still had to handle the responsibility of being their parent, to take care of them, to do what needed to be done, to sacrifice, to put things before myself. So I understand that y'all can't tell me nothing that you have experienced. I've even gone through a period in my life where I thought about suicide, but I was strong enough to get out of that mindset. It was never worth it or that bad, but it still crossed my mind for a period of time. But yeah, but yes, my kids helped me through that moment because I knew I had to be there for them and I couldn't do that to them. So y'all can't tell me nothing that you have been through that I have not been through. I've been through molestation as a child. I've been raped. You can't tell me nothing. All this stuff that you think holding you back, it's you holding you back. But you know what? All those bad experiences in my life help make me stronger as a person, help make me stronger as a mother, help make me stronger as a female. So again, you can't tell me nothing that's preventing you from changing your life. Nothing. I can still tell you some bad things that would shock you, but it doesn't matter. You can get out of the situation that you're in and build a better life for you, for your kids, and for your other family members. So let's put the past in the past and focus on how we want our future to be. Fate does not have control over my future. I have control over my future. The same as you. You have control over your future, whether that be finances, whether that be personal relationships, whether that be career. You have control over that. Nobody else does. But let's move on to the content. All right. As we already established, you have to start with changing, making the choice. It's a choice. Everything in your life is a choice. Your choice. It's a choice to, at this point, change your mindset on what you want to do and what you want to be from here on out. It's a choice that you want to do better and a choice that you are going to be better. I don't even care if you're in an abusive relationship. You have a choice to get out of it, change the people you put yourself around, change the type of men or type of women that you allow in your life. It's a choice. Everything in your life is your choice, and you have control over it. Been there, done that too with the bad relationships. Never again. That's what you call lessons learned. It's a lesson learned when you know that you will not put yourself or allow that situation to happen to you again. That's when it's a lesson learned. It's not a lesson learned if you keep repeating the same bad behaviors. That's not a lesson learned. And parents, I hope you explain this further to your kids if they're watching. These are the lessons that we need to be teaching our kids. So I really hope you're listening. All right. Last video, I had talked about the banking accounts that you should have, whether that be from age 12 to 17 or 18 to 26 and 26 and older. There are things that you should have in place throughout stages in your life. So that's why I broke it down into in ages. So I had talked about that you should have at least 2 checking accounts, whether that be with a traditional bank or a credit union. However you choose to do that, that's up to you what best suits your needs. If it's 2 traditional bank accounts, fine. If it's a traditional and a credit union, fine. If it's 2 credit unions, fine. Don't harp on the words, just harp on the action and put your money where you feel it need to be. Okay? So, 2 checking accounts. Your main checking account, and I say main in regards to if you're working and you have direct deposit of your weekly pay, bi-weekly pay, or monthly pay going into a bank account. This would be your primary bank account. Okay? Even though you have the 2, one of them is going to be your primary. I call this your spider account. This primary account is the body of the spider. And the other accounts that we're going to talk about are the legs, are the body parts. Okay? So your primary is your spider account. That's your foundation. Whatever, however you want to relate this to your understanding, that's fine. This is mine. So your primary account with one bank, whether that be traditional or credit union, this is the account that all your money is going to go into. All of your money goes into. But once that money enters your account, whether weekly, bi-weekly, or monthly, you're going to allocate and manage where your money goes from that body account. And I'm going to say this about your primary account, because I had to change this also. We have a habit. Most of y'all just have one debit account anyway. You just got one checking account. Debit account and checking account is the same thing. Most of you all just have one. And you use that account for everything you do. Everything you do, you use it. Stop. I'm going to tell you right now, because of the first thing that I said. That's where all your money goes. All your money is deposited into that one account. So if you lose your wallet one day and your debit card gets stolen, and criminals are very creative, they will get access to your money. You're going to have to fight tooth and nail to get any of that money back if you get all of it back. And it's going to take time. So while it's taking time, you broke. You can't pay your bills. You can't buy no food. You got to borrow money from somebody. And then you got to go through the embarrassment of asking somebody to borrow money. You're going to go through so many problems while you're waiting to see if you're going to get any of your money back that was stolen. We buy stuff online. We quick to put that out there in the universe, out in the cloud. In the cloud. Stop using that card for everything you do. That is your primary account that every single penny that you work for goes into. So don't give access to it. Stop using that card. Stop sharing it on third-party platforms. When you buy something online or you go into a store, first of all, you don't know if no offense to cashiers, but reality is reality. Some people, they do what they do. If they take your information, or even a waitress, we all know what happens. It's been on the news. You probably know somebody that'll happen to. So again, don't be offended if you're a cashier or a waitress. Don't waste time being offended. So they get your information, steal your money. Most of you all don't even check your bank statement You probably done had 5 transactions on there for 20, 30, $5 here and there, and you don't even know. You didn't even know that somebody was stealing from you because they accessed your information and stole your money. It's been a couple of times. Actually, this happened the past couple of months ago on an old bank account that I had with Best Buy. And I closed my account with Best Buy years ago when they closed down some of the traditional bank locations. And first one was a year after the account was closed. I just laughed when I saw it happen. But this happened from when, how much do I want to tell of this? A family member brought someone into my home. Well, I allowed them into my home, and they stole my checkbooks and tried to sell them on the street. I first found out about it when one of the business owners up on Western Chapel called me because my number was on the check. He said, "Ma'am, I don't know whether you know this or not, but I found your checkbook in my parking lot, and somebody was trying to sell the checkbook." But anyway, that was one situation. And then a year later, somebody tried to withdraw $1,500 or $1,800 out of that account, but it was no longer a valid account because the bank called me, Best Bank called me. Although they had closed the locations here, they were open in other locations, so they were still open somewhere. So they called me talking about I don't remember what they said. I owe them that, or somebody tried to cash a check, and I was like, well, I don't care because the account been closed for years. So if y'all gave them the money, y'all stupid. But that call was a scam too. Yeah, I call people out when I hear what's the word? Okay, it's Sunday. What's the word can I use? When I hear stupidity. Yeah, she tried to get me on that one. I'm not the one, but anyway. So yes, your primary account that all your money goes into. Don't allow access to that. Stop using it. Let that be your body that holds your money for it to enter, and you manage how it exits. Okay? Yes, you're going to keep money in the account, but you need to allocate that 50-30-20 rule. You need to decide where your money goes and how it goes. How it goes should be automatic withdrawal, automatic transfers. It's going to take you less than 20 minutes to open up your bank account either on your computer or on your phone. You select one time as a recurring transfer, schedule however you want, because you click the calendar on what day you want that money to come out, or how often you want it to come out, and how much you want to come out on those scheduled days. You do that one time and you don't have to worry about it again. You keep a little money in the account, but you handle your business first. You take care of your 50-30-20 rule. But your 20 rule, your 20% rule is the first thing you take care of, because that's paying yourself first. Any part that you have allocated for savings, that's what you call paying yourself first. How you going to make the choice to pay other people first and make them money before you pay yourself first and make yourself money? So let's understand that. All right. So If you have a debit account that you are using on a regular basis for everything that you do, first thing you need to do is go on every online platform that you access, buying stuff, even paying your bills. You need to go in and remove that, because every time we make a payment online, it asks you, do you want to save the information? So next time you come into that same platform, all you have to do is click one time and it's going to process that same card. You're sharing your information with third party. Okay, what if your information is hacked? When you go into a coffee shop and you got your computer, y'all see on commercials all the time how thieves and scammers are looking at what you're doing, accessing your information. They have these electronic readers that can scan your information and get your payment information. So don't just give it to them. So change that. Go in and remove that data from your system and stop using that card. A card that you use for, like, when you want to buy online, that's going to be a debit card, because remember, you got more than one. Okay, so that second debit account, wherever it may be, traditional bank or credit union, that's the one you're going to put the amount of money that you have come up with from when you did your budget. You with me? When you did your budget, meaning adding all of your expenses to determine how much you need to make sure you pay those bills on time every month. Once you have added that up, that's the amount that you're going to transfer to the other card, to the other account. And again, you just set it up on the primary account, and it's done automatically every time you have your deposits from your paycheck. It automatically happens when those deposits happen. So you don't have to worry about it. So you know that second debit card that holds your budget to pay your monthly bills. Okay? But when it's time for those monthly bills to be paid, because you're going to set up automatic withdrawals with those accounts using that second card, not your primary card. So you know that money is going out of the account every month. So let's say that card was lost or stolen. They're not going to have any money to get out of their account. If they do, it's low, as opposed if it was your main primary account where all your money's still sitting. They don't have access to that one. They got access to the smaller one. So you have little to no risk on the second card. That's protecting your assets. Okay? Now, again, setting up automatic transfers and automatic withdrawals. Automatic transfers to allocate your money where it goes to other sources, and automatic withdrawals to set up for your bill pay. Okay? That first debit card, you need to stop using if that's where all your money goes. And again, no benefit to using a debit card. But anyway, that's another discussion. All right. So the second checking account is your body of arms for the spider. What is it? 8 legs on a spider? And for some of us, we may have to use the centipede because we got more legs to allocate our money. Whatever suits you for your situation, start from there. All right. Now, that second account, this is my choice. Doesn't have to be yours. Again, you decide on whether you want to use 2 traditional banks, 1 traditional bank, or 1 credit union, or both credit unions. Your choice. Point is, the second debit account, not your main one, not the one that your paycheck is deposited into. Okay? That's I'm calling it the body of arms. All right. Set that up where you want to set it up at. You can use that card to share with third parties. If you want to use that card to make online purchases and stuff, okay, fine. That's the account that's not going to hold money, because that's um that's only going to cover your monthly bills, your monthly fixed bills. Okay. Now, that holds your monthly fixed bills, but on that account, you're going to be allocating money as well. Because remember, I told you about, if you pay a mortgage, fine, it's reported to the credit bureaus. You're building credit history on your mortgage payments, okay? Because it's a long-term loan. But if you're paying rent, you're not getting anything from that but just paying the bill on time. So that's when we go into the credit cards. You need to allocate your credit cards. And I'm going to explain something about the credit cards. We need to change our mindset on what credit cards should be used for. Okay? When you have problem with credit cards, that's because you are abusing them and because you are being ignorant on how to use them. You're not being mindful of your money and your report card. That's on you. So, primary account, you need to allocate where your money goes. The 50-30-20 rule. The second checking account, you're going to allocate that one as well. That's the one you're going to allocate and send to cover your credit cards and your savings accounts. Now, from that, you can do it also from the primary. However you want to do it is up to you. As long as you allocate your money, that's what's important. So, your savings accounts. You actually should have 4 savings accounts. And the only reason I say initially 4 savings accounts, because if you see a large lump sum of money in an account, you're going to affect your mindset on how you think about money. The more you see, the more you can make bad decisions with. Because you're looking at a larger amount, you be like, oh, I can do something with that. Or I do have something extra. No, because if you stick to your budget and where your money is allocated, you will see that you actually don't. Especially when you have a savings plan in place. Your savings accounts. Okay. Your first savings account should be your emergency fund, which is the one you actually ignore. Your emergency fund, remember, should be based on your budget, how much you need per month to survive. Your emergency fund, your first goal is to reach 3 months of savings. Once you reach 3 months of savings, you need to go further to 6 months of savings. You reach 6 months, you need to go to a year of savings. That's your main major goal, to have a year worth of savings that will cover all your monthly fixed expenses. Fixed, not flexible expenses. If you want to include it, that's fine. That means more money you got to save. That's up to you. But the main thing is to make sure you cover your fixed expenses for a year. So in the event something happens, like the pandemic, and you're out of work for an extended period of time, But the pandemic has not been the first financial disaster that we have faced. It's just been the most impacted and the one that has lasted longer. So, saving a year of fixed expenses, that's a burden off your mind. So, if anything happens, you know that you have a year to where you can, well, close to a year to breathe and still manage your affairs and not be worrying about losing a place to live, paying your utilities, paying for food, and your basic needs. That's the purpose of the first savings account, your emergency fund for your fixed expenses. And you get that fixed amount by adding and doing your budget. You can't save if you don't know how much you got to save to reach the goal you're trying to reach. Your second savings account, that is going to be, well, actually, I said something wrong. I said it's the one that you ignore. No, the one that you ignore is the second one. Okay, the second one is your basic savings, the one that you do not touch, the one that you just put money in and let it grow for years down the line. Now, yes, once you reach a certain point, you can choose to decide on how you want to allocate that money saved. But the point is the one you absolutely do not touch. It's the one that you sleep on and wake up and figure out another way instead of tapping into that money. Because if you're following the plan, you won't need to tap into it because you have other resources that you can access. The discipline and the commitment, remember? So, I don't care how much money you put into this savings account. Again, there is no one size fits all for everything that we say on this channel or that you hear in other places. You have to assess what's best for your situation and your financial needs and your financial abilities. So, for someone who's financially struggling, don't say the words, I can't save. I can't pay myself first. That's crap. Because even if you put $10 a week, if you get paid every week, put $10 a week, that's automatically transferred into that savings account. If you get paid every 2 weeks, do $20 every paycheck into that account. If you get paid once a month, you put how much? It's 4 weeks in a month. Do 4, 6, 8, $80 a month. Stop making excuses because we find ways to spend money on stuff that brings no value to our life. We spend money on stuff we do not need. I don't care if you paying for lunch every day at work. You spend $10, $15, $20, especially on Friday when it's payday. You spend like $20 on your lunch. That's your, because we all done it. I done it. That's our splurge. On payday, we get to spend a little more for lunch on something that we want. We go out with our friends on our lunch break, go to the nice place, or go to the one that got the good food that costs a little more, and we splurge and we throw away $20 every Friday. Again, you can't tell me nothing I ain't done. I don't know what I'm talking about. I know what I'm talking about. But I had to change my habits. That $20 every Friday when I got paid, okay, that's money I could have put somewhere else to make it grow into more money. But not that this emergency fund the one you don't touch, the one that you ignore, you're not growing that one. I'll explain that further. Okay, so changing your habits, stop making excuses. You can find ways to save that 10, that 20, that 50, that $100 a month. If you can do more, perfect, do it. Then I'm not talking to you right now. I'm talking to the ones that keep making excuses, that keep thinking they can't do better. You can do better because it's a choice. So that second savings, again, we've established the first one, your emergency fund to cover your fixed expenses. Okay. The second one is your emergency fund that you do not touch for any reason, and you shouldn't have to. Okay. Until, and I'll get to the until in a minute. The third savings account is money that you put aside to save that covers your investments. You put money into this regular savings to use to invest. Now, the last savings account should be your holiday fund. Just because we are budgeting, just because we are saving, just because we are managing our money does not mean we are broke, does not mean we can't enjoy life and do things. You just have to plan for it better instead of, what do you call it? Instead of making irrational, impulsive decisions. That's impulsive decisions. Yeah. So you can still do the things you want, just plan to do them and make sure you have the money to afford it so that you're not broke right after you do it. So the fourth savings account, your holiday fund, put money in there. Again, however much money you want to do and how often you want to do it is up to you. You know what you want, so plan accordingly. That can cover your vacation cost, regular travel, your holiday fund, which covers birthdays, Christmases, special gifts, Valentine's Day. Okay, you got a special somebody, they like to have money spent on them. Okay, you can still do things for them. Just save for it. Or even if you a man or woman and you're dating. Well, I'm gonna say more so on men because a man has a role when it comes to courting a woman. But I know a lot of y'all don't know what I'm talking about. So, for a man, if you are dating, if you are choosing to date a woman, then you are choosing to cover the cost. Don't jump on me. Listen to what I'm saying because I'm a woman who will take my man out once he has become my man. Before he becomes my man and we're in the process of getting to know each other, dating, and then make the decision to date, yes, that man should be courting me and should be covering the cost. But once he becomes my man and we made that mutual decision, and if I want to take my man out and treat my man, I'm going to do that. So y'all understand the difference, right? Don't jump down my throat. Y'all hear everything I said. Okay. So for a man that's choosing to date, he has to understand he's accepting the cost of courting a woman. So yes, you're going to cover the cost. If you cannot afford to really date, but you would like to start, then budget yourself and plan and save for that activity. She don't have to know. Now, if you got a woman that say, I want to go to, what's that restaurant the boys took me to for my birthday? The
one I went to for my birthday?
No, for my birthday.
I don't know.
Okay, it was an expensive Brazilian restaurant.
Oh, wait.
And The boy spent like $500 or more. They 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 chose for course. I don't know. I forgot the name of it. But if that man, I mean, if you had a woman you just met and they want you to take them there, me personally, I don't think a woman has. That's a whole. That's the Saturday. That's the Saturday talk that's coming up. We'll get to that then. Yeah, even though I'm talking to the kids today, all of this applies to you because you need to learn relationship skills. Not gonna get on that. Let me get off of that. So, plan does not mean you have to be broke. You just stay within your budget, stay on task, and follow your plan. So, new date, new woman, new man, whatever, they don't dictate or change your plan. You stick to your plan. And hopefully, you have a woman that appreciates that. If she's smart, she will. Okay. I mentioned before about having a money challenge at home. I know that seems kind of childish, but it's really not. That helps you a lot learning your discipline and your commitment skills when it comes to your money. Like I mentioned before, Kayla has a money challenge. I have 2 money challenges. And actually, I forget about the money challenge if it wasn't for my phone giving me reminders on when to put money in the envelopes. Excuse me. If it wasn't for my phone reminding me to put money in the envelopes, I forget the money's there. So I have a half a year of savings and 2 challenges. One is $100 a week, and the other is you take what is it, 52 weeks in a year? 52 weeks in a year. So I have 50 envelopes, and each one of them are numbered 1 through 50. And I pick 2 envelopes a week, and whatever number is on that envelope, I put that amount in the envelopes and seal them. Kayla's challenge is $5 a week. Okay. So she takes and puts her money per month in the envelope, and she's like 2 months ahead. And she could choose to do another challenge, more than that if she wants. But that was just to start Kayla off when we started the money challenge, in which I posted the money challenge on TikTok, which has 266 views. I'm like, of all the videos that we have posted, that one has 266.
You mean the one on YouTube?
No, the one on TikTok.
TikTok?
Isn't the one you showed me that had 266?
No, that was on.
Oh, it's posted. It's posted on YouTube also. I shared it on YouTube as well. So YouTube for that posting has 266. But I'm not finna get started on how I'm disappointed in family and friends that don't click like, click share every time they watch a video. I'm not gonna get on it now. Okay, so starting money challenge at home. You for yourself, for your kids, for your overall family. What if your whole family, if it's 4 of you in a family, okay, and all 4 of you are working, and all 4 of you decide to do a family money challenge. Let's say if each one of you put $20 in an envelope every week, and at the end of 12 months, y'all take out all the money, and y'all, well, you're not necessarily splitting because you're putting in exactly what you put. You're getting what you actually put in. But the benefits from that, or y'all can take all of y'all money and do something with it as a family, cover and pay for a vacation, or use that money to invest, or depending on how much y'all save, let's say if it's $100 a week, by the end of 12 months, y'all may have enough to cover some startup costs in starting a family business. So yeah, think about that. All right. It's 6 o'clock. Okay, maybe 10 more, less than 10 minutes. We gotta be off of here. Personal credit card. Remember, I told you all you need to change your mindset on credit cards. I had this couple in my car today, nice young couple. They're musicians, and they asked for my information to connect with me on social media to learn about the financial literacy. And they did. Thank you. It makes my heart swell when somebody actually follow instructions and click like and click share. But anyway, one of the comments that the young lady made was that she just don't use credit cards. And part of that decision was the bad habits that her family member has. So she just never liked using or wanted to use credit cards. She just uses cash for everything. I said, well, that's not going to benefit you, especially with you being a musician. That means you're building a business. You're going to need to establish some credit. But the problem is that people's understanding of credit cards. Credit cards do not mean that you have free money to just buy. No, it's a strategy with using your credit cards and leveraging your credit cards. But I've already explained all that. Go back and look at the videos on personal and business credit. I'm not going back over that again. I broke it down. Common sense, strategies, tools. Just do it. But you got to change your mindset with credit cards. It's about building and enabling opportunities that you can have in life. You don't have to spend because you got credit cards. I don't care if it's $5,000. If you got my $5,000 credit card, I don't let anything go over 1,000. And that's the one I use to pay my rent. So whatever is over 1,000 when it comes to my rent, I immediately pay that as soon as I pay rent. I pay the credit card that amount. I keep my utilization way under 30%. 30% of 5,000, I think it's like $1,500 some dollars. So I wouldn't even let it get that high. I'm keeping mine 20% below for that card, because that card I use for rent, car insurance, and car note. Rent, car insurance, car note. That's the credit card I use that one for, the one with the $5,000 limit. The other credit cards I use for other things. Allocating your use of cards, controlling and managing your credit limit, your usage, and your utilization. I got one credit card. I just buy stuff once a month because that's how I manage my spending on my wants. I don't deprive myself because I work hard for my money to get my money, and I want my money to work for me. So I have another credit card that I buy one thing a month of something that I want. That's how I save and budget and plan to do that. With that, just buying something once a month and paying it off before the due date. I got the card February this year. I've had a credit limit increase every month since I had the card because of my behavior, my usage of my card and paying my bill off. So that company rewards me by extending my limit. I started with $200. Now I'm at actually $1,200. I just got a new one, a new increase. Now I'm at $1,200. So yeah. Anyway, changing your mindset and how you think about credit cards. Your money should work for you. Your money should always be growing. Your money should always be an asset, not a liability, or you turn that liability into an asset. With my business credit, just by doing the minimal Well, let me change that. I'm not talking about making the minimal payment. No, I'm not talking about that. No. Never just pay the minimal. You pay either 100% or you pay 80/20. But anyway, go back and look at the videos. But everything that I'm doing is a strategy, is a step to get to where I want to be. So, young lady, if you're listening, please keep following me, and we're going to change your mindset on credit cards. All right. Again, allocating your credit cards. If you use one for one thing, again, don't try to use everything on one card. That's going to get you in debt. If you use everything for one credit card, excuse me. Hey, I got to call you back. I'm live.
Okay.
All right. So, if you're trying to put everything on one card, you're setting yourself up for failure. Okay? So that's why you get more than one credit card. Okay? Forget about how many times you have inquiries and all that. Okay, that doesn't last long when you're going to get those points back. Get the number of credit cards that you need. I'm not going to tell you a number because my number is not going to be acceptable to you. I'm going to have credit cards out the wazoo because everything has a purpose to achieve another goal. But for the basic transactions, have a credit card to cover your mortgage, rent, car insurance, car note. Have another card to cover your utilities. And again, gas, electricity, water. Gas, electricity, water. Oh, and I know it's not a utility, but I'm included. Cable, if you know whatever you use for your entertainment at home, cable, internet, whichever one, include that in your category with your utilities because you know you're not going to go without it. Although it is a flexible expense, but include it for the credit card. Use it for those 4 things. And that's it. You can manage that. And you are working, so therefore you're going to come up with the cash to pay those bills. So just pay that cash, pay that to the credit card. So you're paying your bill on time. You're going to have an increased credit limit because you have good practice of money habits. You're going to improve or show a positive credit history. You're going to increase your credit score, of which you're going to be able to leverage to do other things. You have another credit card. Okay, let's say you go to the gym, or let's say you you pay for Netflix and Hulu, whatever. Those little accounts, again, it don't matter that they're little balances. Put it on the card. You're going to have the cash to pay it, so pay it before the due date. You're killing more than one bird. You're killing a flock of birds at one time by doing all these things with the card. If you didn't have the credit card and you just use the debit card, okay, you just paying the bills. They don't even do they even put a thank you in the email receipt they send you? I gotta look at one of my receipts, my email receipts. See, doesn't say thank you. Okay, let's see. You can even use another credit card to cover all of your deductibles and insurances, like health insurance, uh, life insurance. Yeah, killing more than one bird with one stone, with one pellet. You shoot them all at one time. Yes, master the game of credit cards. It's not a bad thing as long as you are doing it right. And I haven't even covered everything with credit cards. Well, I did on the other videos. All right. So again, let me stress, credit cards are not to be used as an emergency fund. No, your credit card is not an emergency fund, because an emergency fund is having the funds available in the event of an emergency. The credit card is not your money. So no, you don't have the funds available, because you're not going to be able to pay it back to avoid that credit card going into default, because you're not able to make the payments back. Y'all understand that? Change your mindset about credit cards. You should use credit cards for the sole purpose to build your credit data, build your credit score, allocate the use of the credit cards for specific transactions, and create a credit-worthy report card. Please go back and look at the videos on personal and business credit. All right. Okay, we got to hurry up. Well, I got to hurry up. Business accounts. You need to have a business debit account, a business checking account. You need to have at least 2 business savings accounts. One should be for operational costs, and one should be for legalities. Legalities meaning the money you spend to renew your license, to pay for a tax attorney, to pay for an attorney, a business attorney, to whatever the case may be. Use that for legalities. You all should know what I mean by that. I'm talking about legalities. You should have a business credit card to cover operational costs and to cover your net 30 accounts and other debts. The credit cards for your businesses, you're going to be generating the revenue to pay those accounts. So use the credit cards to make sure that they're paid on time, so you don't go past the 30-day net 30. That means you got 30 days to pay it off. So you have the credit cards to make sure those are paid on time, at least 5 days, 5 business days. Is personal and credit. Personal and business. You pay 5 days before. I keep saying that wrong. You pay 5 business days before the due date. So that means you don't include Saturday and Sunday. So Saturday and Sunday would be 7 days. 5 business days before the due date. And then your revenue, you are paying those credit cards off. And you're good at every end. You're good at every end if you just follow the process and stick to the plan and stick to your discipline. You need to have a business line of credit. Okay, you need to open that with the bank or credit union you have at your main bank. Okay, use that to expand your business, to grow your business in whatever direction you're trying to take it. You need to use your line of credit to dive into joint ventures. You know those opportunities that come up where you're not ready for because you don't have the money to do so. Use that line of credit for new innovations for your business. So yeah, we got to start changing. And I've talked about before whole life insurance. Leverage your access to your money, okay, without having a credit check or obligation to pay it back. I don't care if your policy is 20,000, 30,000, 50,000, 250,000. Make sure you have a whole life insurance policy with any mutual life insurance company. It doesn't matter, just long as they are mutual life insurance, okay? Make sure they are a carrier that can pay dividends, because dividends are not guaranteed. The policy needs to be a paid up addition rider account, which is policy, which is called a PUA. So ask the questions when you are setting up these policies with these insurance agents. And if you have an agent that don't know, find another agent, please. Yes. The whole life policy, the cash value in the first year of coverage, you need to ask to make sure that it's a policy that has a high cash value within the first year of coverage. Because if you have a traditional whole life insurance policy, it can take 3 to 4 years before you build up the cash value, because you're just making the regular monthly premium payments. So it takes time to build up, to kickstart your cash value. But with the PUA policy, you're kickstarting the cash value in your policy because of the amount that you pay in. You're paying your premiums ahead. I'll explain this further in another video. Of course, it's guaranteed death benefit with continued premium payments. But keep in mind, the first year of you making regular monthly premium payments, if you die within that first 12 months of you having that policy, the death benefits will not be paid because you haven't put in a year yet. If you didn't know, ask your insurance agent. Okay. If you have a whole life policy like Kayla at 18, her 50,000 will double to 100,000. Okay. The policy accrues value that the policyholder can leverage. When I talked about infinite banking, again, another video. Okay. Cash value in a whole life policy is like having a line of credit for your family legacy. And I'm going to leave it here. The last thing that I'm going to do a video on later, talking about HELOC, which is home equity line of credit, how you can use that to leverage to build your financial portfolio. What I just mentioned here is only half of what your portfolio should consist of. Okay. Next steps. Again, you need to go back and look at the past videos. Please click like and click share. The goals we are striving to reach are going to be limited if our numbers don't increase with your help. We need your help to make our numbers increase to even take our platform to the next level. And just taking a few seconds to click like, please, people, please help us. I don't know how, I can't stress it anymore. Content covering next video. Next Sunday, we're going to come back on, we're going to jump back into career development, the strategies and tips that you need to step into the workforce and building your educational goals and your job opportunities. And heads up, by August 22nd, we're going to be starting Facebook Live. I just ordered some equipment so that we can have everything everywhere. And yeah, so we're going to start that next Sunday, the 22nd. Next Sunday, I'm going to be announcing then that you can join the Facebook private group. And I'm going to post a schedule of when I'll be offering one-on-one or group consultations when it comes to personal and business strategies, when it comes to financial literacy. And I'm going to be posting the dates for my first 2 master classes, starting personal finance masterclass in October and starting the business masterclass in November. And soon after that, I haven't decided on when yet, but I'll be doing a master class on starting a rideshare business. If you haven't already heard, I am expanding my first business, my rideshare business, and I'll be having a fleet of which I'll be hiring drivers, and I will transition into car rentals. But actually, sooner than later of me starting my fleet, I am helping a friend of mine start his fleet, and I'll be managing his business for him, not as an employee. He'll be contracting me, King's Legacy Group, and I will be invoicing him, and he'll be paying me on a monthly basis to manage his fleet. And he said he want me to be his business wife so we can build an empire. Okay, I'm fine with that. I'm still doing my own thing. But yes, I'm there to help him. because I trust him. So looking forward to that. And actually, the rest of this night, I got to work on the contracts for he and I. Uh, and I'm finishing up my first project to launch. I mean, my product to launch. Well, actually,
You say
launch. My first two products to launch, and that's my long-term investment logbook and my life registry journal. So by then, I will be announcing everything that's going to be coming out, the official dates. So stay tuned. And as always, I hope that you found some value in the content shared today. So until next time, please take care of yourselves and know that knowledge is the real power when it is applied. And remember, a road better planned is easier traveled. See you next Sunday. Adults, see you Wednesday. Hey, been talking as long as I have. I'm tired. My feel a little slow. I got the wrong mouse. Bye, y'all.